guys. Today I'd walk away from insurance and including insurance revolution, right? Both home insurance and life insurance. I want to talk about something that is always on my mind because this is tough. As one of the biggest challenges for accounting student, for business student to understand the concept. That this is something that in accounting, especially for the business accounting and in bookkeeping, right? I call that the litmus test, meaning that to one, you can use this topic when you interview for somebody, bookkeeping or even accountant, that ask them this question: that do you truly understand the double entry system? Whereas that you have like a debit entry and a credit entry. Explain that to me if you do. And then that will, you'll be surprised that many people will be, they will say, they can't really come up with a very clear idea. That's a good sign that this person doesn't really understand double entry system. It doesn't matter how much degree he has, how high, how many titles he has. When it comes to fundamental understanding of the concept of a double entry, meaning the credit entry and the debit entry, and then that's one of the things. Business student always complaining about not understanding it. Even some professionals, they've been doing this for years. It doesn't have to be the expert on this. Okay, experience is not the same as the competence. So that's one thing that I I suggest you, especially for the small business owners, when you're looking for people to understand. So you may want to argue that why bother? Because with software today, we're talking about the QuickBook, right? They never actually ask you to explain what is the debit and what is credit, and then it's basically everything. They do everything behind the scene. When you open a QuickBook, they have so many categories. They have like a income category. They have like expense categories. They have like so basically you never actually have to talk about it. That's why many people, if you ask them this question, they will say, "Why bother?" In the book entry, in the QuickBook, they will do that for you. True, they will do that for you. But here's the one thing I think is important: that you need to have some fundamental understanding that to be able to, when in some situations that only your deep understanding will help. The software may not be help. So that's the one thing that I want to talk on this. I've been feeding on this. Basically, we want to talk about the three things to help you understand the double entry, meaning the debit entry and the credit entry. Okay, to quote Shakespeare, that to debit or to credit, this is the question, right? Again, a lot of people that don't really understand it, they're still confused. And then there's some mechanical way to remember that, to memorize that. We'll talk about that later. But a better way is to organic way to really understand it. And then once I believe that my three approaches, my three methods will help you to truly understand it. The first one is to shake off the mysteries or misunderstanding from the banking sectors. When it comes to, because assume everybody has a bank account. Whenever you have a bank account, they give you a debit card and they give you a credit card, right? So people always think, okay, debit card means that I can use the money. You can use the card to withdraw money, to use the money, right? And then credit card is whenever I deposit the money into the bank, they give me the credit, right? So I can use that later. That's actually a very harmful, very misleading way to think of the debit entry and credit entry. The double entry is far more complicated than that. So never think about that debit as the withdraw money, because debit could be, meaning that you could enter the money, right? You can still have a debit entry. And on the other hand, the credit entry, you can, take money away from it. So we'll talk about this more later. But here's the one thing, the number one thing, you must completely shake off this banking terminology. Okay, in the banking terminology, it's clear cut. It's one way or the other. Debit means taking money out. Credit means putting money in. That's the thing you have to shake off that. So an easy way to put it is that debit can mean in accounting double entry system, debit can mean put the money in, increase the value. Like, for example, asset, right? So we'll be talking about this later. But if you increase the asset, you are increasing the debit, okay, not the credit. That's against the banking terminology. On the other hand, you can also decrease the value when it comes to debit. So you can use the debit entry to indicate your expenses. Every time you have expenses, your value is decreasing, right? You're using the money, just like you withdraw the money from the bank, right? So expenses account debit could mean you increase the usage. So just like I said, that increasing the value of asset versus increasing the value of expenses are totally different. They're the opposite directions. Okay, when you increase the asset value, you are having a debit entry. Similarly, when you increase the expenses, which means actually you're taking the money out, you're also having a debit entry. Now, on the other hand, let's talk about the credit, right? Debit, credit happened could be whenever your with a credit entry, you could either increase the liability, meaning that you're borrowing more money, right? Getting a loan, getting student loan, a business loan. And then that's one case. Another case would be you'll be increasing your revenue. Revenue, everybody knows that's it's a good news, right? When you have more revenue, your basically the money that put into your pocket will be increasing. So that's why you see that increasing in revenue versus increasing your liability, they're totally different than they're opposite, right? One is good, if you want to increase liability, it's kind of increasing your risk. On the other hand, if you increase the your revenue, that's a very good news, right? It means that you have a big sales and your money coming into your account. So all these things that you can see, I just give you two easy examples to show that in the business accounting or in financial accounting, personal accounting, the meaning of a debit and credit different have different meanings, different interpretations. It doesn't mean like in a banking system that debit is bad because you're taking money and credit is good because you keep the money in. So let's stop here for today. We'll talk about it more tomorrow.